Hi friends, welcome to GST Gyaan. Today in this topic we will discuss what are the major changes that are brought in income tax and which are effective from 1st April 2020. So let's get started. So the first point is new cost valuation norms and its impact on capital gains on property brought before 1st April 2020. Friends, if you acquire any property before 1st April 2020, the SSC has two options, that is to compute the cost, that is the cost of the asset acquired, or the fair market value available on 1st April 2001. The SSC can choose any one of these. But now, as per the new changes which were brought in the Finance Bill 2020, it is said in case of any capital asset being land or building or both, the fair market value of such asset as on 1st April 2001 shall not exceed the stamp value of such asset as on 1st April 2001 if such stamp value is available. Friends, as per this, if the stamp value is available as on 1st April 2001, then the fair market value as on 2001 cannot exceed such stamp value. So you should have to take this stamp value if the fair market value is more than this. Okay, then what is stamp duty value? Stamp duty value shall mean the value adopted or assessed or assessable by any authority of central government or state government for the purpose of payment of stamp duty in respect of an immovable property. So the value adopted or accessible by the central government, the value which is determined and considered by the central government or state government for the purpose of stamp duty is the stamp duty value. And next concept is new income tax rate slabs. Okay, if your income is up to 2.5 lakh, there is no rate, that is nil rate. If your income is 2.5 lakh to 5 lakhs, then you have to pay 5% tax rate. But after availing rebate on section 87A, you will ended up paying zero tax. So you can say up to 5 lakh rupees there is no tax, but you have to file return. If your income is 5 lakh to 7.5 lakh, then the tax rate is 10%. If your income is 7.5 lakh to 10 lakh rupees, then 15% is the slab rate. If your income is 10 lakh to 12.5 lakh, then 20% slab rate. If your income is 12.5 lakh to 15 lakhs, then you will fall under 25% slab rate. And finally, if your income is above 15 lakhs, then you will fall under the highest slab rate, that is 30%. Friends, these new income tax slab rates are optional given to the taxpayers. If the taxpayers are willing to pay under the old rates, they are still allowed to pay. But if any taxpayer has opted to pay tax under new income tax slab rates, then he has to waive few deductions which he can avail in the old tax regime. Next, under Finance Bill 2020, clause 98 has been through clause 98 a section has been introduced, that is 271 EAAD. This is with respect to the penalty for fake invoices generating. This is for any false entry or any entry relevant to the computation of total income with an intention to evade tax liability. So if you make any false entries in your books of accounts, or you have done something that is affecting your total income with an intention to evade tax liability, then you are liable for the penalty under income tax. What is the amount of penalty? Then the assessing officer may direct such person shall pay by way of penalty a sum equal to the aggregate amount of such faults or any entry omitted. Then the penalty will be the amount equal to the aggregate amount of such false entry. If you make any false entry, the penalty is equal to the false entry or any entry that you have omitted from the books of accounts. Next, the definition of false entry has been given in the Act. This is as follows. False entry includes use or intention to use forged or falsified documents such as false invoice or in general a false piece of documentary evidence. If you make any entries in the books based on the falsified documents which you have created or invoice in respect of supply or receipt of goods or services of both issued by the person or any other person without actual supply or receipt of such goods or services, you are raising invoices without actual movement of goods or without actual receiving goods or services from any other person, and invoice in respect of supply or receipt of goods or services from a person who does not exist, and you are raising invoices and billing invoices on the person who doesn't exist at all. Next, new tax audit limits applicable from 1st April 2020. The threshold limit of 1 crore for tax audit was proposed to increase to 5 crores. Earlier, the tax audit limit was 1 crore rupees, but it has been increased to 5 crore rupees with effectively from assessment year 21-22. But there is a condition. If the cash receipts are limited to 5% of the gross receipts are turnover, your receipts, your cash receipts should be limited to 5% of your total receipts, and your cash payments are limited to 5% of your payments. Only if you satisfy the conditions, then only you can avail the 5% limit. This 5 crores limit. Otherwise, you will fall under 1 crore limit only, and you are liable to get your books audited by chartered accountant. And moreover, the due date has also been extended to 31st October, whereas it was 30th September every year. There is also a change in residential status, that is section 6, where a citizen of India or a person of Indian origin whose total income other than foreign sources exceeding 15 lakh rupees during the previous year, he is resident but not ordinary resident only when if he stays in India for 120 days or more but less than 182 days, then he has to satisfy one more condition, that is he has to stay for 365 days or more in the preceding 4 years. Then he will be considered as resident but not ordinary resident. But he has stayed more than 182 days in India, then he is considered to be resident in India. If he is resident in India, his both foreign source income and Indian income both will be taxable when he is resident in India. Next, if any citizen of India and he is not liable to tax in any other country by any other reason, like due to his domicile or residence or any other reason of any similar nature, having income exceeding 15 lakh rupees other than foreign sources, then he is deemed to be resident in India, and the Indian generated income is taxable in India, and is considered as resident but not ordinary resident in India. Next, extension of time limit for sanctioning of housing loan. Friends, government has taken a initiative, that is housing for all. Under this, section 80 EEA has been introduced for giving relief to the taxpayers. If you, under this section 80 EEA, the assessee can take deduction up to 1.5 lakh rupees, but subject to conditions. Those conditions are: The stamp duty value of the residential house property should not exceed 45 lakh rupees. And when he is availing such home loan, he shouldn't have house while he is availing for such loan. And moreover, the last point is loan should be sanctioned by the financial institution during the period beginning on 1st April 2019 and ending on the 30th March 2020 actually. But this date has been extended and is set to 31st March 2021. So, if the loan is sanctioned between 1/4/2019 to 31st March 2021, still he can avail the deduction of 1.5 lakh rupees. Next, reducing the rate of TDS on technical services, which is other than professional services, and royalty exemption of cinematographic film. Friends, TDS on technical services were covered under section 194J, where which says 10 which is TDS on professional services at 10%, but this rate has been reduced to 2% from 1st April 2020. Moreover, there is a condition that it is only for technical services, which is other than professional services, and royalty for sale, distribution, and exhibition of cinematographic films. But in any other case, it is still 10%. Now the changes from 1st June 2020. So let's see what it is. New TDS and share sale statement to taxpayer by Income Tax Department. Friends, we all know very well we have 26 AS, that is TDS statement. But the department has said that it is going to change the format of 26 AS because it is going to include share sale statement to the taxpayer. If you made any share sales, those will also be included in 26 AS, and the department has said that it is going to release the new format of 26 AS very soon. Next, changes from 1st July 2020. This is new TDS on cash withdrawals from banks. Friends, if you withdraw any amount, if you withdraw cash from post office, cooperative banks, or banks exceeding 1 crore rupees, then a new TDS will be deducted while making payment to you by these financial institutions. I will make a separate video on this TDS section, so as of now I am skipping this concept. So next, changes from 1st October 2020. New TCS on foreign remittances, selling of overseas tour packages, sale of goods for 50 lakh rupees. So new tax collected at source is also has been introduced under these three. Next is income tax TDS on e-commerce from 1st October 2020. Friends, before explaining this, I would like to tell you the overview. Friends, when you make an order from Amazon or Flipkart, this e-commerce portal, the e-commerce portal will forward the supply order to the supplier, and the supplier will deliver the required product to the buyer, where the buyer make directly payment to the e-commerce portal but not to the supplier. So government has introduced a TDS where the e-commerce portal will retain commission of its and remit the product amount to the supplier. Here, while making payment to the supplier, the e-commerce portal should have to deduct TDS at the rate of 1% and remit the remaining amount to the supplier. Yeah, that's it for today. Friends, if you like my video, hit the like button and subscribe the channel and hit the bell button beside it, and share this video to the needies who need this while filing the returns. So that's it. Thanks for watching.